They didn't. We got Craig Moffett. We've got Steve Kovach with us as well. Craig Moffett, as an analyst, I'm going to kind of ask you the same question that I just asked Mike Santoli. I know you don't cover the company. I'm not asking you to comment on the earnings or anything like that. But does this IPO mean anything to macro tech in what has been just a bonkers, in a good way, market for big tech the last couple of years?
Well, sure. I guess there's two ways to look at it, though, right? I mean, on the one hand, it certainly portends more IPOs. If you doubted whether the market was receptive to companies coming public, well, this is a pretty good answer. On the other hand, and you can't escape this, it speaks to the speculative fervor in the market right now, and you have to be at least somewhat sober about whether this is sustainable and healthy.
So that's kind of where I was going, Craig, with it. Was this idea not good for Figma, good for Dylan Fields, good for the field, good for the employees, good for anybody who made money on this? We're happy, we're CNBC, it's a good thing. But I guess, Steve Kovach, I do wonder, the word froth has been thrown around. Again, we're seeing these IPOs, either the bankers really screwed up because they obviously mispriced the stock, or the demand for just technology stocks is so high. The stock just tripled its IPO price.
Yeah, it kind of reminds me of the CoreWeave IPO a couple months ago.
Yeah.
And if Bill Gurley was here, the famous VC out here, maybe he's already tweeting it, that money has been left on the table here, to your point, that it was may have been mispriced. We know it's 40x oversubscribed and things like that. But look, it's everyone's thirsty for a growth story. That's why I'm out here in Silicon Valley this week covering earnings. And that's why everyone's so excited about what they're seeing from OpenAI. That is a huge growth story. And that even showed up yesterday, Brian, in Microsoft's results, because so much of the cloud benefit that Microsoft is seeing in artificial intelligence is coming from those hyper-growth startups like OpenAI. So it's bleeding into big tech as well, as we cover all these big tech earnings, Brian.
Yeah, and Michael Santoli, listen, CoreWeave was a big win for the NASDAQ. This a big win for the New York Stock Exchange. So both exchanges right now can say we've had these blockbuster IPOs. You don't see these moods much anymore. It is like there's human beings there. It's packed. People banging, smiling. Now, if they're all rich, I guess I'd be smiling too. But it's a big time media scene as well when you have an IPO like this.
Well, there's no doubt about it. And, we can't overlook the fact that we've been focusing in on it here. And then what do you know? Over the course of the morning, there's been a lot of building attention toward this possibility that it ends up being kind of a blockbuster open. We also had Circle. That was another one we had here at the New York Stock Exchange, the stable coin play. And that did kind of open at a peak, and then it's really pulled back a fair bit. Just as a benchmark of whether the stock was underpriced at the offer, whatever. The bankers are selling it to people that are looking at the current revenue rate and making some reasonable assumptions on growth, and they say, here's my multiple I'm willing to pay for that. Now, there's a lot of remarking upon the co-founder, Dylan Fields, the CEO, having this kind of spring-loaded stock compensation package as part of all this, and basically getting a lot more stock granted, it's like an Elon Musk style, if big supposed moonshot goals were met in terms of the stock price, right? Those started at $60 a share. And it has to be an average of 60 days above $60, you get that incentive kick in. Well, that sort of gives you a sense of what they thought was a moonshot when they were pricing this deal and setting that compensation package. And they go from 60 to 130, all those scaled incentive thresholds.
And the stock is halted right now, again, for volatility. It is halted at $112.77 a share. The stock was priced at $33 a share. I just broke out this thing they call a calculator on my phone, and according to S&P Capital IQ, Dylan Field owns 61.32 million shares. That's according to S&P Capital IQ. A lot of that's locked up, whatever, you can't sell it. This is what we call a good problem, by the way, guys. So according to my calculator, at that price, Dylan Field, all of 33, is worth $6.9 billion. Mike Santoli, I'm sure we're going to see you more in just a few minutes. We got Craig, we've got Julia, and we have Steve Kovach still with us. Appreciate the patience, all of you, because we brought you on to talk about Meta and Microsoft, which we're going to get to right now, and we're going to continue to show Figma once it starts to trade again. Craig, kind of go back to the previous point you were just making. CoreWeave, Circle, these are all new companies. A lot of euphoria. I'm trying to find the right word without being like TV dramatic. A lot of euphoria around these stocks. Is it deserve? I mean, does deserve have anything to do with it?
Well, I'm not going to comment on stocks I don't cover, but I will say, you know, I was around. This is an embarrassing admission of my age. I was around in the 1999 internet and telecom bubble, and the euphoria around those stocks. And the problem that you create, and I heard some of your guests on earlier shows during the day today talking about this issue, is when it starts to crowd out everything else to the point that it becomes this kind of very single-minded focus on a very small number of growth stories. Right now, that's all around AI. And where most of the rest of the market, not just some of the rest of the market, but most of the rest of the market is being left behind, it's hard not to start to feel like that is a problematic setup.